And welcome to today's episode of Hung Chin Hong Sweatin Money. Let me. Oh, you doing this to me now? Okay, there we go. We may or may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research or investing before buying stocks. I'm your host, Kong, along with my co-host, Keepson. And that's all I was to you, your intro for some reason. But okay. So let's take a
It's
look at
it's
what
it's it's
the
the special sauce. Keep it a little bit different, spice things up every episode.
yeah. This is what happens when you're not in the studio again, but it's all right.
Appreciate it.
Yeah. So QIHU 360, which is China's equivalent to Norton 360, a computer security company, is trying to delist themselves from the U.S. stock exchange. So what they've done is they've gotten into a deal with several other China-based companies, totaling. No, are you taking a piss right now or what?
No, is that actually audible?
Yeah.
Interesting. All right. No, I was actually cleaning my desk from from what was basically dinner, essentially 2 bags of chips. I'm like, what the? Interesting.
Bags of
Yes.
chips. Mm.
I know it's a very sad dinner, but we'll have to do.
So, anyways, back to this story. So, this company, Chew 360, has decided to delist themselves, and they've enlisted the help of other China-based companies to help buy out their American shares to take it private. So altogether, these companies will spend about $9.3 billion dollars and take on $1.6 billion dollars in debt. The reason is that compared to their evaluation in China, their prices are much lower in the U.S. stock exchange. So this was in the making for a while, but it was delayed due to the major stock drop this summer and part of the fall in China. Things aren't exactly that much better now, but they figured they might as well do it now and cut their losses.
No comment, but I think this would be an example of an institutional move.
Yeah, it sounds like it.
Mhm.
But now, so for those of you who aren't familiar with Qihoo 360, let's take a look at that compared to a more well-known Chinese company, Alibaba. Um, Now, there's no need to account for inflation since, since the Great Recession, inflation really hasn't been much of a problem. But Qihoo is actually coming out with a profit. Alibaba, on the other hand, is still trying to reach back to its original IPO pricing. So it seems that not all Chinese companies are failing on the US stock exchange like Alibaba, but it seems those companies aren't willing to be listed on here either, and this is only part of a series of Chinese companies trying to delist themselves from the US stock exchange.
Well, I wouldn't say it depends on how you define profit, because you take a look at the EPS, it's literally saying earnings per share, which means it is profiting, or at least the company is earning profit or net income.
Well, in terms of the evaluation of its stock, it's still not making any, it's still not increasing its evaluations.
I see.
So,
Yeah, I think this interesting thing is that when it's IPOs, it could be overvalued or undervalued, or the changes in valuations. And there's just a lot of long period of correction and just market gauging or speculating on what the true value would be.
I just think Madrin has a few issues he needs to figure out. I mean, like personally and in the way he manages things, but you know, whatever.
Yeah, have you tried to use Alibaba, the site?
No, I haven't.
I'm surprised anything can be transacted on that site in the first place. Be-
Exactly.
yeah, it's very surprising. It's not in the industry, the technical industry, it's just that it's not very fluid. There's a lot of resistance, like to purchasing. There's a lot of friction in that system. Like if you want to buy something, you could find a good price, and then afterwards, instead of buying the product, you have to contact the supplier. Then the
Right.
supplier contacts you, responds, and then you transact the deal. I'm just like, wow, really? I mean, in this day and age, if it's honestly listed for that cheap, why don't I just click a button?
See, that goes into our next topic, actually.
All right.
Investopedia takes a look. Oh, wait. Let me get the other transition. There we go. Investopedia takes a look at the business models between the two e-commerce giants, Amazon and Alibaba. Amazon sells specific items, and for the items they don't want to sell, say items that may hold up room for inventory of other items, uh, they let those resellers, the resellers sell those items and take a percentage of the sale while also offering subscription services like Amazon Prime and offering streaming videos.
And
Alibaba.
hosting.
Oh yeah, and hosting. Yeah, the what do they call it again? S3 or something?
They have like Amazon, the EC2,
Right, right.
S3, and then a ton like Glacier.
Yeah, yeah, Glacier. Yeah, that's another one. So
Yeah.
now, Alibaba, on the other hand, is more like a middleman, between the buyer and seller. They also charge people to have their items and products at the top of search lists and charge some of the larger retailers with some of the other websites that are under the Alibaba brand. However, because of Alibaba's position, it has also gone into the online payment system and is also somewhat of a new financial institution that has emerged. Sort of like how PayPal is trying to get into the mobile payments and how Square Up is coming about.
Yeah, it's not that surprising with that amount of capital that they're having access to. What else would you do with that money? You have so many billions of dollars to work with.
Right.
Probably at that point, you pretty much want to get your hands into everything just
Oh yeah.
because you can.
Now we've heard Amazon's plans to use drones to deliver items, but now it also plans on creating its own shipping company to get past the delivery companies like Postal Service. Actually, I'm sorry, United Parcel Service and Federal Express. Full disclosure, I own FedEx and or FedEx stocks, and this may hurt me a bit when it does come about. I'm sure it'll be a couple years in the making.
Does it take that long to spin up a shipping company?
I mean, I would think so, but I mean,
Mm. Huh. Well, I'm just saying your position is very dependent on that research altogether. That's very interesting. I mean, why? Is it because it's
well, because
cheaper?
last year there was a lot of delays from FedEx and UPS. They had labor strikes issues. There was also the at the port of Los Angeles. Actually, the port workers were all on strike as well. So
Wouldn't even if you're Amazon shipping, wouldn't you still be using the ports as well?
yeah, there is that. But then I guess maybe they think that they can use another port instead, or um, still, it's like if they control one more element of their business rather than having to rely on someone else, then I guess that just makes them all the more like powerful, or just the fact that they can control another aspect of their business. I think it makes it easier for them to do things.
I don't know. It's interesting. It's what's under being discussed is kind of almost like a vertical supply chain management, and it's like horizontal where you basically get like more stores, and then there's vertical where you go deeper into just manufacturing process.
Yeah.
And in this case, it could be an example of that, but then it also makes me question is like, what is Amazon's like business model and what's the bread and butter? And I don't think the bread and butter is really shipping. If anything, I don't know if it's even profitable a segment to venture into. And then the sheer amount of costs, like how much do you need to invest into infrastructure? Like, do you need to buy boats? Do you need to buy cars? Like all this other
Right.
stuff. And then whether or not it's gonna be panning out. And even then, like the question is this like Amazon like the shipping company? Are they creating a new shipping company or are they just basically in-housing the shipping expense?
I'm assuming they're going to be in-housing the shipping expense.
Yeah, then they can't in terms of like being like a shipping company, they're not exactly doing what FedEx and Postal UPX is. Then the other question is that well, there's a concept called economy of scale. Is that the bigger they are, the cheaper it is to do certain things. It makes me wonder if, which basically means it's cheaper, which makes me question if Amazon making this transportation, uh, com- basically if they're creating a transportation company within themselves, if it's a profitable venture or not, if it's ultimately going to save them money or just cost them more money.
Yeah.
It's a good thing to watch, I think.
Yeah, yeah, definitely is.
Could affect profitability, the bottom line, long term.
All right, and in Argentina, the country next to Venezuela, and which it had previous ties with the left-leaning country, now has a new president, Mauricio Macri, who was sworn in on December 16th, Wednesday, and it's clear that relations between the two countries are going to change, not for, and they're not going to be as friendly as they used to be, is what people are predicting. Argentina has had disastrous economic issues like hyperinflation. As of June 2015, Argentinian inflation was at 15.3%, and many supermarkets have adopted to using electronic price tags to keep prices up to date, to the minute. Plus, currency restrictions in place have an official rate and a black market rate, just like North Korea. As of last year, the country was at risk of going into default. Many US-based funds have divested themselves of their Argentinian bond assets, or sold them off to smaller dealers. And it's these smaller dealers that want full payment. Now, for a fuller history of Argentina's economic situation, you can head over to globalsecurity.org's website. So, with this new president, he has decided to do away with the currency restrictions and appointed Federico Sturzenegger as the new central bank president, cutting export taxes and individual taxes. And he'll pack the court with people who can help him improve his chances of getting favorable laws passed. But his party is still the minority party in the legislature, so this will be interesting.
Yeah. In a hyperinflation economy, it's probably better to borrow money than it is to lend money out. That's really all I have to say on that topic, really. Like borrow $100, and then
Yeah,
before you know it, you have $100 worth like $50, really, but you only have to repay $100. Which I wonder what's the effect of a hyperinflation market on the loan lending market, and then the effect on the lending market. You don't want to be a lender. The effect of that on business, I think it could just create a horrible downward spiral in the
oh yeah,
economy
no.
itself.
I mean, even though he's taking a more right-wing sort of a conservative approach towards trying to solve the economic issues that the country has,
Hmm.
some of it may work, but like a lot of people are actually still worried about some of the other aspects, like the one you just mentioned, and a couple others too. I mean, you can read around other websites and check that out. So
I wouldn't want to travel there. If I was a traveler and visitor, I just like convert my U.S. dollars into Argentine dollars, and then like an hour later or about a minute later, it'd be like worth way less.
pretty much.
I
No,
know. I
that's
was
why.
like, I
No,
want to buy a
no.
burger.
That's why when you go to a country like that, you don't change your currency at all. You just use American dollars because it's more. I mean, that would be worth a lot more.
That's true. At least my $1 is always gonna be $1 USD, but my $1 Argentine money wouldn't make sense.
Right.
But it makes me wonder about the electronic price tags, though. I mean, that cannot be cheap.
Probably not. But I mean, it's no different than the situation in China. Like, was it right after World War II? Um, they tried to enforce similar currency restrictions, and then of course hyperinflation happened, and people were like you actually had to make sure you paid for the noodles first, because then if you waited till you were done eating the noodles, it would have been a different price.
That's craziness.
Yeah.
Well, good thing we don't have that problem yet.
Yeah, seriously. Now, new tax breaks were passed. If you're self-employed and have a simple IRA, you can roll over previous 401ks as long as you've had them for 2 years. If you have 529k accounts open for your kids' college funds, you can now write off more money. For those unfamiliar with a 529k account, these are tax-deferred accounts and remain tax-free as long as the funds are used for tuition and other school-related expenses. Something that was approved of earlier this year called an ABLE account allows people with disabled children to sock away $2,000 a year tax-free for related expenses. Tax breaks that saw extensions are like the ones that I'm about to tell you. So if you make less than 110k a year, you can deduct mortgage insurance premiums as interest. That is for people who pay less than 20% and are charged PMI. If you're going to college, you can deduct up to $4,000 for college expenses, as long as you're a single person making less than $65K a year, or a couple earning less than $130K. Then there are those temporary tax rules that are now permanent. So the one I just mentioned is a temporary, but when that expires, this following one is going to take effect. So the American Opportunity Tax Credit for college expenses means that $2,500 in tax deductions for individuals who make less than 80K, or 160K for couples. You can itemize and deduct state and local taxes on your federal taxes now as well. Not having health care or the Cadillac tax is also postponed for the year. And on top of that, employers can now give up to $250 a month in tax-free benefits to offset commuting to work. And teachers can also provide or deduct $250 for expenses they pay for class. But that is only for the year, not per month. So with your situation, you might want to negotiate that with your employer.
I know. I think I might have to talk about it. At least I think we will have departments that can do that for us. And
Well, I mean,
besides, it's not like they're
it's going to
saying.
be automatic. It's the thing, you know. I think you should still tell someone or whoever.
Yeah, I mean these deductions are more for like business to be aware of that they can deduce from their taxes.
Right.
That these benefits they provided, they could say, oh, we gave that benefit to him, therefore we can reduce it on his taxes, on our taxes as a business. Not so much his taxes. The effect on it is negligible unless they actually give me the benefit. But that's a separate discussion.
As far as I understand it, I think it is for you. Like if they give you $250, like that's basically tax-free money, if I'm not mistaken. I mean, I could be wrong.
For the business itself, I think.
Whatever.
But then again, at the same time, it's another question too, because then if you report expenses, you're reducing your taxable income anyways. So technically, by paying me the money, they already, unless it's for me, then yeah, I have to look into the article a little bit more.
Yeah.
Yeah, if it's for me, then that means I could deduct $250, so that will not be part of my income in terms of benefits I receive for commuting.
All right, now one thing that will affect the economy and the money you have in your pockets is healthcare spending. It turns out with the Affordable Care Act, aka Obamacare, the models they used to drive down healthcare costs was exclusively based off of data provided by Medicare. What they failed to do was model it based on market prices charged to the private insurers as well, which would reflect more real-world scenarios. When you factor that in, some areas that spent a lot actually spent a lot less, and vice versa. However, some areas did stay the same no matter which model was used.
Yeah, there's not much you can say on that.
Yeah.
Some things change, some things stay the same. Very astute observation there.
Okay, so moving along, oil has a bunch of predictions, and none of them seem to be good if you invest in oil companies. Some people say it'll average about $38 a barrel in this coming February, and Goldman Sachs says it may go as low as $20 a barrel. BlackRock CEO Larry Fink went on TV saying that he sees slow, gradual raises in interest rates, but also believes that the U.S. economy may be decelerating, but doesn't necessarily see a recession coming through.
That's good. That actually translates into good news.
Yeah.
So in essence, we're normalizing.
Right.
That's all.
Bloomberg has said that a bunch of ETFs who have invested in oil companies, expecting them to come back up, have lost altogether $24 billion.
Ooh,
yeah.
Bad beat. Next time you lament the money you lose in the stock markets, just think to yourself, at least I didn't lose $24 billion.
Well, I mean, you know, like last week I admitted to losing $2,000, but, you know, it's okay, I guess, because, you know, those guys we just mentioned, they lost $24 billion, and Warren Buffett hasn't really had a good year either, and says that there aren't any cheap stocks to buy right now. but he notes that we haven't gone into a bubble area.
That's true. I think the problem with being too big is it's too hard to move as well. You're not as nimble. Just because, like, if you sold all your stocks, the market won't be really affected. But if Warren Buffett sold all his stocks, you can guarantee the market will have a reaction on the downside.
Yeah. Bloomberg says that the dollar will strengthen in the next year, and it might be a good time to buy. They brought on Dean Mackey to talk about why he thinks so, as opposed to people like Carl Icahn, who isn't as optimistic. So if you're a currency trader, this one's for you guys. Oops. Business Insider took a look at Kentucky Fried Chicken, owned by Yum Brands and trades under Yum, versus Popeye's Chicken, which trades under PLKI. I honestly like the crispiness of Popeye's, but honestly, I prefer Church's Chicken because their chicken is juicier, not necessarily more oily, which, along with Popeye's, is under the ownership of AFC Enterprises.
And I believe they might even have better biscuits, but I can't find a Church's Chicken around here. Unless
There's
there was
one
one.
in. We'll talk about it offline.
All right, you let me know.
Yeah.
That sounds delicious.
Oh, it is.
Yeah.
Spoofing, putting in fake futures orders and then canceling them, which drives down the prices of a specific item, futures item, then buying them while they're low and selling them as high as they can, is a form of market manipulation and is legal according to the Dodd-Frank Act. However, it turns out many more people are doing it, and few are getting prosecuted for it. Some companies are taking matters into their own hands by putting in their own spoof orders to trick the spoofers.
Very high level game that not you and I are in a position to play.
No, but I mean, it's good to know.
Yep. Market is a dangerous place.
Yeah, well, let's take a look at the week in review. Things were doing good last week until Thursday. We saw a slight drop, and Fridays where we saw a pretty big drop. The Dow was down 367 points, or 2%, and the S&P was down almost 2%, and the Nasdaq was down 8.5%. And then on today's performance, yesterday at least the markets were up, and today jumped up even further. The Dow Jones was up 165 points, and the S&P 500 was up 17 points, and the Nasdaq was up 32. Yeah, let's skip that article. I think that's a vestige from last week. So let's take a look at the portfolio review. Goldman Sachs had previously predicted that Microsoft would not do too good 2 years ago. For a dividends investor who reinvests their dividends into the company, that would have been great because then I would have been able to buy more shares with the same amount of dividends. But that hasn't been the case, really. They did dip for a bit, but for the most part, they've been doing extremely well, which although sadly means I can't buy as much of the dividends, but on the other hand, I'm not complaining. Goldman Sachs, being 2 years late, has finally changed their tune from grading Microsoft as a sell to a neutral. It's a little bit late, but hey.
And remember, they are the experts.
Yeah.
Scary thought.
Yeah. I mean, I make my mistakes too. I mean, I made a wrong prediction previously on when the Federal Reserves might raise their rates and all that stuff. But hey.
Well, as you know, it's the Monty-Hall paradox. It's basically the concept of variable change. As you get more and more information, the original decision, original thoughts, and whatnot might not be the best ones. And you basically, when the opportunity presents itself, you must reevaluate and possibly switch your decision.
Yeah, true. But there is a key thing to note about this, is that Microsoft has been up 84% since Goldman Sachs made the prediction, as opposed to the S&P 500, which is only up 24%.
It's very interesting. Makes you wonder why. I don't think there's a lot of new Microsoft products that are very exciting for me.
Well, I think the fact that they're spreading out to new platforms and the way they've reorganized themselves, I think investors are really happy about that.
Yeah, maybe.
Well, moving along, let's take a look at investing strategies. Investopedia has an article. Wait a minute. There we go. Investopedia has an article explaining how shorting a stock works, but also says why you shouldn't short at all. They basically say that the math doesn't add up since you're borrowing on a margin in hopes that you can sell the stock higher first and then buy back at a lower price. But then that means you'll also be paying interest on the margin loan. The longer you hold, the more you'll pay in interest.
That's true. That's a valid point. Although they do not cover the scenarios in which the loss is so great that is worth the margin. There's also the other concept is if you do option put on the stock itself. Not quite sure how that would work, but I don't think you incur interest on it. You just buy the right to sell the stock at a certain price. Not so much the actual stock. You don't borrow the actual stock.
Huh. Oh well. Let's move on to recommendations.
Mm-hmm.
Now, this isn't exactly my recommendation, but Warren Buffett's recommended asset allocation for his wife. When he passes, he has a trust set up where 90% of the funds will be in low-fee index-matching mutual funds and only 10% in short-term government bonds. Conventional recommendation is to take 100 minus your age, in which your age determines your safer assets like bonds, and thus you rebalance every year or every quarter. This runs against the norm, but supposedly it was back-tested, and this method only failed 2.3% of the time.
That's great. Sounds like a very valid strategy then.
Yeah. So
I'm curious. Maybe we should run those numbers and see what happens.
yeah.
I'm curious about the backtest itself and what they use for backtesting. You know.
I mean, of course, they didn't go into those sorts of specifics, but yeah, I mean, if that is the case, I mean, it's kind of mind blowing, really, because I've always told everyone to make sure that whenever they invest in their retirement accounts and all that, to do the 100 minus your age.
Uh,
I mean, that seems pretty valid, honestly. But a 90-10 mix, that's interesting, because then when you're in old age, you don't want to lose as much. But I guess it's assuming that over the years you're going to make that up, just with the sheer number of time you're waiting out. I don't know.
I don't know, either that or he foresees that within a 10-year span or a 20-year span. Warren Buffett's not exactly a young guy, so chances are he might just like croak pretty. Well, how long was the backtesting interval? I think that might matter
From
too.
no, from the supposed, let's see, I think it was from the end of World War II, maybe, I'm not sure.
Interesting. Yeah, intervals are definitely very interesting because then in a certain time span, it might be a bad decision, it might be a good decision. For example, and then notice that it's a 30-year interval. Like if it was like a 10-year interval, I think the data, the backtest results would have been a lot different. And how old is his wife? Because the whole 30-year thing, is he saying that he expects?
I think that is another thing because we don't want to outlive our retirements, and I mean, let's assume that his wife is. I mean, because Warren Buffett himself is already, he's pretty old. So his wife, let's assume that she's maybe even 10, 20 years younger than he is, or whatever, right?
Mm-hmm.
If she's gonna, live for at least another 30, 40 years, then probably that's all he really needs. Because if you think about it, maybe it works specifically in his situation because he knows she's not going to live that long.
Or the sheer amount of money involved, even if
There's
she
that as well,
loses like
yes. But I think
20%,
that's
50%.
yeah, but I think that's less of an issue. And I think it's more like her age and how much longer she has. And I think he's banking on the fact that the U.S. economy is not going to see a black swan event like 9/11 or the Great Recession anytime soon.
Mm-hmm. And then if it's on an upward trend, then it will balance out the downward trends at a later time.
Yeah, and actually, getting to another topic, Ray Dalio has a video about how he basically, um, how on average, how many years, like a certain economy, when it bounces back from a depression or a recession, how it usually tends to do much better afterwards. So if you're going off of Ray Dalio's predictions, we actually have a long way to go before we're going to see another recession. Like it won't be until maybe we're in our like 70s or 80s or something that we're going to see something like that.
Yeah, that would be great, I think. Good times, good times.
Good times. And that's it. So we may or may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before buying and investing in stocks. All right, goodbye.